Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Friday, August 9th, 2024 edition. Please be sure to subscribe for the latest financial news, interpretation of financial news in the shortest amount of time. Thank you for your support. Today we're going to be talking about consumers. Consumers are cutting back on credit as debts and delinquencies rise. So credit card use is rising at a slower pace associated with recessions. In other words, people are beginning to tighten their belt across the country just in case things get a little rocky in terms of this economy. It may not be a full-on crash, but we are thinking that we're going to be heading into a slowdown either before the election or after the elections in the next year especially. And so many Americans are cutting back on household debt, trying to cut down on some of their household debt, whether it's downsizing or eating out less or taking less vacations or just finding ways to cut down on subscription costs or any extra discretionary income. They're finding ways to cut back and use that on spending on preps and essential things that they need in the household. So that's good news. That's great news. And more companies, especially with these rates, the interest rates on credit cards are over 30%. It's very bad if you have a lot of rising debt like that. So you want to try to minimize your revolving debt. And the dollar dips as the yen heads for the first weekly drops in 6. So the dollar is very strong around the world in terms of its nominal power, because it's the world's reserve currency. And as you know, the dollar has been on a strong against other major currencies. It's been on a tear the last few weeks, above $104, $105 against the other basket of currencies. But today on Friday, according to Reuters.com, the dollar was off a 1 week high against other major currencies. So, and this comes off, of course, with the big jobless claims numbers that they had this past week. So the U.S. currency was down against Japanese yen following a 3-day rebound as Thursday's firmer than expected employment data spurred a paring back in bets for Federal Reserve interest rates cuts later this year. So they're saying, well, wait a minute now. They're saying that the rate cuts that everybody's been talking about is not a guarantee. It's not 100% slam dunk that the Federal Reserve Bank is going to cut rates in September and then again in December or whenever. So that's another thing that we have to look at too. So the dollar index, which measures the currency against 6 others, was down 0.0136% at 103.14 following the 3 days of gains. It was above 104. So it's eased even against the Swiss franc. It eased as well. So that tells you that the dollar is coming under some pressure now, as people realize this thing is not exactly secure as we thought it was. Now, Dow Jones ended up for the week 0.0113. They all ended up for the week here. Nasdaq, S&P 500, but there are cracks forming in the U.S. job market. This right here was on Thursday, just a couple of days ago, last Thursday. You see all these signs in the door saying now hiring, and people put in, but it's just collecting of a database. Like I said, they hire maybe 1 out of 50 people or 100 people, and then the rest is just collecting a database of names and applications. And a lot of these jobs that you see hiring either at some of these retail stores like FedEx, or you see it on the school bus driver, on all these drivers, CDL license now hiring. You see that a lot now. They're hiring CDL commercial license would drive these trucks and shipping and stuff that they claim they're hiring, but they're not hiring as much as one would think that they're hiring. So monthly job gains have slowed but remain stable. The labor market remains stable, but the problem is going to be the supply chain and also the rising prices for businesses. For many businesses here, the rising prices is going to be a huge problem here, because think about it. It's costing people more to acquire goods and services. Really, it's costing more dollars, really, and that's just because our value of our dollar has been so diluted. The purchasing power of it's been so diluted because we printed up so much money these last 4 or 5 years. And this is not even counting the infrastructure bill. Remember, President Biden said the infrastructure bill, we're going to start all this high-speed rail thing and all that stuff. And a few projects, to his credit, they've started. But can you imagine they're going to be adding to a $35 trillion debt that we have, and at a time that consumers are cutting back, Americans are cutting back, and the only person that's not cutting back is the government spending and defense spending. And so that's an unfair task that we have here, because we're having less tax revenue coming in. And they're getting ready to replace a lot of workers here anyway. As you know, our replacement workers are coming in as we speak from all over the country. All over the world, excuse me. They're coming in, and then the rest of it's going to be filled by, automation, AI, robots, and that's fine. I have nothing against that. But it's going to cause this economy to go through a very bad transition in the next 2, 3, 4 years here. and basically a recession or a depression. So most people are thinking, and they would be absolutely correct. Now, it's not always a bad thing. It's just that, it's just going to be more pain in terms of the unemployment rate, which rose to above 4%. And it's going to continue to rate here. You see, layoffs aren't mounting, but we haven't seen the layoffs coming later on in the fall, in the winter, and then next year for sure in the winter of 2025. We haven't seen those layoffs hadn't gone through the economy yet. So the news is not going to report it until, it's a significant number, and meaning that, it's above, let's say, 100,000 or something like that. Then the news will start, all your major outlets like CNN and MSNBC and all the big guys will start reporting it. That's after the fact, after the damage has been done. Just like the hurricane that's blown through, then after the winds die down, then all the assessment crews come in and tell you, okay, this road's closed, we have this many people out of power, etc., etc. So there's something to look back onto. But in the meantime, ladies and gentlemen, I want you to have a blessed weekend. Continue to prepare. Continue to stack goods and tangible goods and services that your family and your friends and your neighbors are going to use and amongst each other, and you will be okay. Trust in God. Continue to pray. Continue to have faith. That mentally, that definitely will get you through some things that that could be coming down the pipeline later on this year or next year or the year after next. So, talk to you soon. Enjoy your weekend, and I'll talk to you later on. Thanks for listening. And be sure to subscribe to Preach to Me so you can get the notifications when the latest video comes out, because some people say they haven't been getting notifications. So thank you for listening. See you in the next video.